All right, so start of the new week, Bitcoin, we got good movement. We closed the week above 40,000. What's on my screen right now is the liquid index for Bitcoin. This hasn't closed the new week yet, or has it? No, it hasn't closed the new week yet. So this data is a little bit delayed, but the reason I have this up is I got a question in the comments about reviewing the correlation between the dollar index and Bitcoin. So, and I've seen this argument before that whenever the dollar's strong, Bitcoin goes down in price, and whenever Bitcoin goes down, and whenever the dollar is weak, Bitcoin goes up in price. So I have looked at it. I've put very little weight to it, but I mean there is a little bit of correlation. So, but I think the narrative as Bitcoin continues, to grow and get more adoption, the narrative is different. And it's changed kind of each cycle. So like we can look all the way back. This data goes all the way back to 2011. So we can look at maybe the very first bull market, right? The very first bull cycle, which was kind of, I mean, let's not include this because this is very early, but let's include like 2013 was whenever I actually very first heard about Bitcoin, oddly enough. And we can compare what it was doing then, right? So we had the dollar here. It's 2012. This is going into the 2013 run up. There was two double. There was two all-time highs in that year. Price ran up so aggressively. So as price started to run up, and let me expand this out. Going into 2013 and 2012, yes, we got a weaker dollar. And then price started to run up. So there was some inverse correlation. But then by the time we hit 2013, the correlation had already started to turn positive. So Bitcoin was, as the dollar was growing in strength here, because this is a 20 moving average, 20-week moving average. So it's kind of filtering a lot of the noise out. And I'm looking at a long-term time frame because this is more of like macro movements more than daily movements. Which is why I pulled up the weekly. So as Bitcoin price was going up, the dollar also started to go up. So you got, this hit 0.81. That's positive. That's correlation enough to be to say that there is correlation between the two assets as far as movement in which direction. And then price pulled back. We got strong dollar. It started to get inversely related, right? So the second part of the cycle, the second peak. Then we got inverse correlation, right? It didn't get quite past 0.8, but it almost got there. And you would say, okay, dollar's going down, Bitcoin went up. So in the first part of the cycle, we got positive correlation, then negative correlation. So you would say, oh no, there's no correlation, right? But then towards the tail end, and this might be just because Mt. Gox failed here, and then price crashed. So, but is this enough evidence to say that, Bitcoin's correlated to the dollar? I'm not going to say yes, especially not here, because dollar started going down and then Bitcoin started going down, and then you almost got high correlation here, right? If I move, these are the standard settings, but I think if I move this to 10 weeks, you would get correlation, right? So dollar went down, even here negative, here again. Going into it, it was negative, and then it was positive. So you can see there's, if I used the 10-week moving average to average, to kind of smooth this out, there's a little bit more noise, right? But this is more of like a macro trend. So I would definitely want it to smooth out the data more. And if there was really true correlation, I think this would stay, closer. I would say that you would never get these upper peaks to where you get close to correlation between the price movements. So yes, was this a coincidence? Dollar went up, Bitcoin, there was negative correlation there, or inverse correlation, I should say, between the assets. But then you went sideways, and then Bitcoin went sideways, and then now you have right towards the start, I would say, right whenever we've already reached the cycle low, and then we're going into the next halving in 2016, you start to get correlation between the assets. The dollar starts to go up, Bitcoin starts to go up. And then I would say probably 2017 was whenever it really kicked off. We started getting out of the woods in 2015. 2016, it moved sideways, but you still got some good movement. And then you went to the all-time highs towards the end of 2016, right here. It didn't quite get there, but then in January, we got there, rejected, and then it broke through, right? So you had high correlation going into basically the last year of the bull cycle for the 2016 halving into 2017, and then you got a weak dollar, and then did that fuel it? Did that fuel that? Or was it really driven by supply and demand? Was it really driven by stock to flow, and that these are just coincidences of the cycles in the weak dollar, in a weak dollar? And maybe, I don't know. I don't, yeah, you get some correlations here, but if there was, I think if there was true inverse correlation, you wouldn't get these peaks. I would say that it would stay below 0.5 and it would be more towards the inverse, right? So is there times when Bitcoin is inversely correlated to the dollar? Yes, but there's also times where Bitcoin's correlated with the dollar. So as the dollar moves up, so even here in 2019, it almost got to that correlation. Same thing here. Got the weak dollar, and you could well, no, you got a stronger dollar, right? The dollar index went up, and it's not a surprise that it happened in March. So everyone was exiting, right? The market was crashing because of COVID, and you can even see here that Bitcoin started to move up in price as well. If we could have broke through here, if say COVID wouldn't have happened, I kind of think that Bitcoin would have broke out in early 2020 in March, around that time rather than later. It took the shock of the selling. There was high demand in the dollar because people were exiting their positions to basically minimize their risk and keep their losses at a minimum. And then you saw, is all this decrease in dollar demand because there's so much inflation, right? And there's a weaker dollar. You could speculate that, and then you see Bitcoin price go up as the dollar weakens, and then now here, but then you started to get correlation, right? It went, and then we kind of reached, it wasn't quite the top area, but Bitcoin started going sideways, dollar started going up, and then here, the dollar starts to go down, and then you start to get almost correlation to Bitcoin, between the dollar and Bitcoin. So as we stand here, it looks like we're about to go inversely correlated, possibly. But I mean, I can bring it to a live chart now that we've looked through it historically. So yeah, it looks like we're about to get negatively correlated. Bitcoin price going to go up and dollar's going to go down? We can look at the interest rates, right? So the way the interest rates work is if there's expected inflation, the interest rate should match that, right? Or else you're basically getting negative return on your bonds, right? Your yields should be equivalent to your inflation or higher, or else it's pointless to be in bonds. And bonds are supposed to be considered, a hedge towards inflation. They're supposed to pay out at least inflation, and they're not. The interest rates are being held down by the Fed. Basically, the market is not being allowed to act the way it wants. It's being highly manipulated. So yeah, is there a correlation between dollar and Bitcoin? I wouldn't rely on the data because you can look. There's times where it is inversely correlated, and then there's times that it is positively correlated. So can I use that as data? No, because I would say it's unreliable. I would rely on other information. So let's look at. So what can I compare it to? I can compare Bitcoin to. Let's compare it to the interest rates. Let's compare it to the 10-year. Right? Let's compare it. Okay, so the bond yields. Apply. Okay, and let's bring up the bond yields as well here. Would this give me more reliable? Oh, hold up, it didn't give me okay, yeah, okay. So now, is Bitcoin correlated to bond yields? I would say no. Again, because you're getting areas of high correlation, and then you're getting areas of inverse correlation where the bond yields go down, And then you're getting bond yields going up with Bitcoin going up. That's high correlation. Now, I did say as Bitcoin's stuck around longer, you could, this would have to go all the way back to 2008 to really see a large injection of money into the system. Could Bitcoin over the next 10 years show correlation to interest rates? That's possible, right? Because now this narrative, even though it was there before in 2017, that Bitcoin's a hedge against inflation, it's really picked up steam since we had this injection of money in early 2020 because of COVID. So are we going to start to see correlation between interest rates and Bitcoin? As interest rates go up, will Bitcoin also go up? I mean, we started to get the correlation here in November. It looks like it started to taper started to go back up, and now it's tapering off. I guess the question is, are interest rates going to go up? And we can analyze that. So right now, to answer the question that was in the comments, I would say no. As far as using the dollar as trading information, as if the dollar is strong, Bitcoin's going to be weak, and if the dollar is weak, Bitcoin's going to be strong, I wouldn't use that to trade on. But I can look at interest rates, and it's something that I have been looking at, and I actually have a chart on it, and you can see I drew this kind of like what is a symmetric triangle a couple of weeks ago, this is a pennant is what I drew. That's what I drew. So I drew it here starting at this breakout, and then what happens whenever you break the pennant? It's the height of, I guess like this. So let me just look up pennant. Pennant trading. Just so I can kind of show you what I'm talking about rather than explain it. So here's the pennant. So you have the flagpole, and then you have the pennant inside of that. And then you can have a breakout level or a breakdown level. So what this is this is a breakdown. Now, yeah, price goes up, and you either have a bearish pennant or a bullish pennant. And what I'm drawing here is I'm drawing a bullish pennant, but with a bearish breakdown. Like it broke down. It didn't break up, because if it broke up, then I would draw it here, and interest rates would go up, right? That if I didn't know what this was, that's what the asset was. Maybe it probably should have been drawn here on the breakout, so I can draw that here. And yes, it's not the exact angle, right? Maybe I can draw it somewhere here. So I think your interest rates are going to go lower. I think it's going to go below 1. Now we had a 9. Can the interest rates come back? Are we seeing a 1 to 4 candle correction and then interest rates going down lower? I'm not sure. But as of right now, that was the target, right? So the target was basically under 1. And if I draw it, this isn't exactly it's just a guide, right? So I would say interest rate's going to go below 1 again on the 10-year. And as of right now, gold, because I was talking about gold is not performing well. I had a 9 here. I said we're probably going to go down. The start of the week, gold went down so much. It was down a lot. I looked at it earlier. So it opened here, and it went as far down as almost 5%. I still think we're going to get here. And I think if we get here over the next couple of weeks, that would mean interest rates are going to go up. Because now I'm saying that. Now I'm trying to draw a correlation between interest rates and gold. Right? So I'm going to go here. That's what you see whenever you see something being relatively inversely correlated to an asset. Right? So I'm going to pull up my 10-year, and you can see, yeah, there was positive correlation here. Oh, no, it didn't quite get there. Has it ever been positively correlated? 0.8, it has to be higher than 0.8. Not there. Right here it was. So as interest rates went up, gold went up. And that's kind of what it should be doing. So, but lately, as of late, there's inverse correlation for the most part. As interest rates go down, gold has been going up. As interest rates go up, gold has been going down. And then here, interest rates went down, gold went up, had the breakout. Here, you're getting positive correlation, but this is the start of a new week. But here, I mean, it's inversely correlated. It's been basically inversely correlated since June of 2019. Gold is not doing its job. It's not a good store of value. It's not protecting you against inflation. We know that inflation's high. But you can almost say, okay, gold's kind of inversely correlated, more so to interest rates. Well, let's compare it to the dollar. Let's do the dollar and see what it looks like. Dollar demand, let's change this to dollar. Yep, so it looks like inversely correlated to dollar strength. Definitely here. Dollar was going up, gold went down. I mean, this is all macro stuff. I'm not going to say I'm the greatest macro trader in the world. I'm still learning a lot about it and what the ins and outs. But technically, as I'm looking at this, it looks like there's correlation. And I still think we're going down on gold. I think gold is losing its store of value narrative. Bitcoin doing better. But let's get back to Bitcoin because I want to analyze this real quick. I want to answer that comment. We had the 9, retested the area, could be 1 to 4 candles, and going back up. We can pull up the CMF real quick. Oh, hold up. Before I close that out, hash ribbons. Hash ribbons at one point of the day had clicked a buy. It's not there yet. It looks like the hash rate had went, because this is a 30 MA and the 60 MA. So it looks like the hash rate was higher during the day at some point to where it closed, where it kept this high. I can look at the raw values on this. Yeah, it looks like it was a little bit higher. This is from the 7th or the 6th. What's today's date? Today's the 8th. I don't have update data. But it was insinuating. I mean, we had the cross and we had a buy signal. We're probably going to get the buy signal sometime this week. That's a good, I was talking about it yesterday. That's a good signal to buy, not financial advice. But I did say I think we're going to retest this breakout area, which would be around 42.3, so like mid 42s. We can, but this hash ribbon should signal a buy sometime this week. We can look at the CMF. We can see the CMF is rising, which is great. If we get a retest of this area here, with CMF continue to rise, we're probably going to get a pretty good breakout. CMF on the weekly hasn't been doing much of anything. On the 4-hour, I mean, we kind of consolidated and it started to break down. We can look at it on the hourly real quick. Again, it started to break down. Let's look at the funding rates. Funding rates, let's look at it on the daily. Okay, it's still negative, which is good. If it flipped positive, I'd be a little worried. On the weekly, still negative. Might take a little while for it to flip positive. Negative on the 4-hour. It went positive here, and price ran up, and then we went down. But we usually counter trade that. Let's look at our moving averages real quick. Moving averages weekly. Yeah, we're going up. We had resistance here at the 30 MA, so we got to close above 40,000. We closed at 43,829. I think that's good. I think we could come back to 42.3. That would be ideal. So you would see this, we retest it, we'd maybe kind of go a little bit of sideways for the next couple of days, and then we would break out higher to this 46, 47 area. So we'll see if that works out. Let me bring up the two indicators that I like to keep it simple. We're getting bearish divergence here, but bullish divergence, our bullishness on the CMF, because our CMF is staying high. We need to break this area right here. So like this 0.33, I'm going to say that's resistance. Once we see that break probably on a daily close with our RSI starting to creep back up, that's probably going to be a signal to go all in. But we should still get the CMF, I mean the hash ribbon buy signal. And let me be clear, that hash ribbon buy isn't like a perfect indicator that's going to catch you on the day and then it's going to go up the next day. You might have some negative days. You might get some drawdowns. You might get like a 10 or 15% drawdown. but it signals a roundabout area that could be a good entry. So yeah, so we're getting some sell-off here, which is okay. We can let the RSI reset. We can say maybe we go to the 0, on the CMF, but we really want to see some strength here on this breakout line of this channel. It doesn't have to exactly get there, but if it does, this is where we want to see the CMF start to go up significantly. So yeah, I think we're okay. We're just looking to see where this is going to go. We can get a 6. We can get all the way up to a 9 count. I still think we're going to get resistance here at 59, 60,000. That'll be a next maybe accumulation area until we break out. As far as any other patterns I see, this could be a cup and handle. A cup and handle. But I'm going to stick with the channel because the channel is easier. So I think that's all I want to talk about. We did the correlation thing, the question, and then we reviewed Bitcoin. So I think that's about it, and thanks for watching.